Hi, I'm Brooke Thackeray with Horizons ETFs. Thank you very much for joining me today. Today I'd like to use the Horizons Seasonal Rotation ETF, ticker symbol HAC, its weekly commentary as a basis for this market update. So let's jump right in and take a look at the action in the markets last week. Here we can see the S&P 500 produced a nominal loss of 0.1%, but that doesn't tell the whole story. Last week, the S&P 500, every single day of the week, had a gain of either 0.5% or more, or a loss of 0.5% or more. In other words, it was quite volatile. It ended up being fairly flat, but there was a lot of volatility during the week. If we take a look at the Canadian stock market using the S&P TSX 60 index, we can see that it had a loss of 1.5%. That's a huge difference compared to the S&P 500. This is largely the result of the weaker sector performance from the energy sector weighing on the Canadian stock market. In other developments last week, we did see Biden come out with a proposal to double the capital gains tax on high-income earners. S&P 500 dropped almost 1% on Thursday as investors didn't like the news. On Friday, investors thought it over and said, well, it might get watered down eventually. And as a result, they changed their tune and pushed the S&P 500 up by over 1%. Also, we are in the middle of their Q1 earnings season, and so far the numbers have been coming in fairly strong. According to Refinitiv, 85% of the companies, S&P 500 companies reporting so far have beaten their expectations on earnings, and earnings have increased by 33.9% over last year, Q1. Now, this number must be taken with a grain of salt because last year, Q1, really was when the COVID-19 pandemic was unfolding. If we take a look at some of the sector performance action last week and also, too, as well, what HAC was up to. HAC did reduce its exposure to the industrial sector. The industrial sector finishes its strong seasonal period in early May. And HAC has been reducing some of its cyclical exposure recently as we get closer to the end dates for some of the strong seasonal periods. Last week, HAC did exit its final position in the material sector and also exited its final position in the consumer discretionary sector as well. Now, on average, over the long term, the consumer discretionary sector ends its strong seasonal period on April the 22nd. As a result, HAC exited its position in the consumer discretionary sector last week. Last week, HAC started to initiate a number of trades to get into the healthcare sector. Now, the healthcare sector, on average over the long term, has a strong seasonal period that starts on May 1st and runs until early August. And the healthcare sector has actually been performing quite well recently. Let's take a look at the performance of the healthcare sector last week and the other major sectors of the market. So this graph here shows you the major sectors of the S&P 500. It's from stock charts, and using all these ETFs listed up here, we can look at the performance of the sectors last week. As a reference point in red here, the S&P 500 produced a loss of 0.1%. The biggest loser of the week was the energy sector at 0.8% loss. Last week we did see, and that was in teal here, and we did see the real estate sector in the U.S. produce a gain of 2%, just over 2%. That's the green bar here. And the healthcare sector in orange here, 1.8%. Now, I'll come back to that in a second. We saw consumer discretionary in blue and bright green, communication services and technology in pink here. All these sectors underperformed the S&P 500. So some of this money from these sectors flowed into the healthcare sector last week. So what's going on here? Now, let's just take a step back. In March, we saw the utility sector. It was the top performing major sector for the S&P 500. And this was while interest rates were rising and the S&P 500 was going up. The consumer staples sector also outperformed the S&P 500 in exactly the same environment. In April, we've seen money rotating into the healthcare sector. So what's this indicating as the S&P 500 is close to its all-time highs? Investors still want to be invested, but they're becoming a little bit more concerned, and they're rotating into some of the defensive sectors. Now, the defensive sectors, some of them have either started their strong seasonal period or are just about to start their strong seasonal period. What's going to be interesting to watch over the next few weeks is to see if we see this continued rotation out of some of the cyclical sectors into some of the defensive sectors. If we do see that take place, this could be an indication that the market could pause coming up shortly as well or soften. It's something to watch out for. Thank you very much.